decide.
Check, 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 check. Check, check.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.
Good evening, everybody. Hopefully everybody doing well. Hopefully everybody is doing well. Y'all come on up in here. Y'all see I got my Barry White going on. Now give me a second, man. I'm a tad bit frustrated because I understand people gotta do what makes sense to them. You know what I'm saying? People gotta do what makes sense to them. But you know how it is when you're talking to your kids. You talk to your kids about things that you've been through, and you be screaming at the top of your lungs. You know what I'm saying? And they just don't understand you. They think you're just being dad. They think you they think you don't they think you don't know anything. You know what I'm saying? And so you be like, listen to me. I have experience at this, right? And they just don't listen. Hold on. Sorry about that, y'all. I had my headphones on and I heard something weird in the house. And my son was out there making noise. Um, but so there's hold on. Sorry about that. So um when so I'm gonna talk to y'all, right? Right. I'm gonna talk to y'all. When it comes to these prop firms, right? Every prop firm has the maximum amount that you can withdraw every pay cycle for a certain amount of pay cycles. Some have a max you can withdraw in perpetuity. Some have a maximum amount you can draw for a certain amount of days. Some have a max you can withdraw for a certain amount of withdrawal cycles. All the rules are different. You have to read the rules, right? So listen to me. This is me, right? And the reason why I say I'm frustrated, and the reason why I'm talking about this right now, is because um, somebody in the gang don't want to listen to me, right? Somebody in the gang don't, and you're free to do whatever you want. Everybody, everybody needs to trade. Let me preface it by saying everybody needs to trade. Um, and yes, it's stemming from the conversation this morning, but it's a little bit more. It's a little bit more than the conversation this morning, right? Everybody need to trade and do things in accordance with their plans and their goals for their own personal situation. Okay. But when it comes to prop firms, right? The name of the game, right? The name of the game is to get payouts. That's the name of the game. They have rules you need to abide by to earn a payout, right? If you abide by the rules, when you log into your account, right? I just did it tonight in Apex. I just did it tonight in Tradeify. If you log into your account in Apex and you go to the payout screen, and there are accounts in there inside that drop down window, request your payout. Apex will tell you the amount you can request. Apex will say request an amount between 500 and whatever the max you can request. It will tell you the exact numbers. It'll say between this and this. I just did it again, right? I had a 50K account that was in the payout window that I've done enough trade and met all their rules. Now in a 50K account in Apex, you can request if you got enough like if you have $1,500 above the buffer, it'll say request any amount between 500 and 2,000. If you got $1,500 above the buffer in Apex, right, for a 50K account. When I logged in, mine said request any amount between 500 and 1,075. You know what I did? I request a payout for $1,000. Give me my money. Right? Give me my money. Right? That $1,000 I just requested, right? Because I didn't break any rules, I didn't do anything. That $1,000 I just requested, that covers the cost of several accounts that I've ever bought from them. Right. I'm totally in the green with Apex. I'm totally in the green with Tradeify. I'm totally in the green with these prop firms that I'll be trading through. Right. But give me my money. Okay. If don't worry about, because it's like this. This the thing. When you look at the like, because a lot of people who don't know, a lot of people, and I'm saying this because a lot of people don't know. You look at these influencers online and you see them saying they just withdrew $10,000 out of an account. I just got a $10,000 payout from Apex, right? One or two things that's happening, right? One or two things that's happening. Either they have 10 accounts where they just requested $1,000, or they have 5 accounts that they just requested $2,000. Right? They don't have one account where they requested $10,000 unless they have had 6 payout requests already, because you can only request a certain amount for Apex. You can only, for a 50K account, you can only request up to $2,000 per payout cycle until you do that 6 times. It don't matter if you have $1,500 above the buffer or $45,000 above the buffer. You can only request $2,000 per payout cycle until you do that 6 times. And once you do that 6 times, then once you go through the payout cycle again, now mind you, right? If you have $45,000 in there, right, you still have to trade 8 days where you make 5 of them days, you got to make at least $150 per day before you can request again. You still have to do that. You still have to make 5 days of $150 and trade and take trades on 8 trading days. You still have to go through all of that, no matter how much you got. And then you can only request $2,000. So once you do that, right, then you can go in and request more than 2,000 after that 6th time. But guess what? Right? If you sit there and try to build it up, you're not getting any money because you're not requesting. And then what if after you request that first 2,000, right, you get into a slump and you start having bad trades and you start to spiral and you start to eat more and more and more into your profits, because you still got to have 5 days where you make $150 or more. within 8 trading days. Right? A bird in the hand is worth more than two in the bush. Request even, and I was talking to the gang today. I told the gang, I said, I showed them I was like $110 away from making 2,500 for this pay cycle for Tradeify, right? So initially I was like, I'm only going to request 2,250, right? But when I went in there, I said, no, I'm requesting 2,500 because what is it going to do? It's only going to take my buffer down to 1,700 instead of my buffer being at 2,000, it's going to be at 1,700. Whoop de doo. $300 less of drawdown. You know what I'm saying? $300 less of drawdown. And then if I spiral, get out of control, blow the account, guess what? I've requested 1,500 out of that account, which gave me 1,350 because they keep 10%. I requested 2,000 out of that account, which gave me 1,800. And then now I just requested 2,500, which is going to give me 2,250, right? That's a whole lot more than what did I pay for the account? $84. I think it was $84. I paid for the account. It was 80 something dollars. That's a whole lot more than 80 something dollars that I've requested. Right? Give me my money. Right? Ain't nothing guaranteed in this trading game. You are not guaranteed to build your account up. Don't try to impress people on the internet. Right? Are you saying leaving money in the account allows you to have more drawdown or wider stops? The the amount of money that you the amount of money that you have in there don't got nothing to do with your stops, right? Yeah, if you leave more money in there, you got more drawdown. But who freaking cares? The name of the game is limit your risk. Why are you trying to build more drawdown? What are you trying to do? You trying to I just heard something. Are you trying to we notice what? Slow down. Or slow down. I see something about lump name that say slow down.
No, I don't know whether I had put it, I raised my hand by mistake. And then I was trying to put it back down, but I ain't typed nothing in there.
Oh, I heard something go, and I was looking, and then I saw something that said slow down. I'm like, what? Okay. No, I'm talking about it just said by your name. It just said by your name. It say slow down. And then maybe that's the AI saying something to me. Because it says something about we noticed you spoke something and it went away real quick. Anyway, um, yeah, y'all get what I'm saying. When you get to where they're saying you can take a payout, take a payout because the name of the game is getting a payout, right? The name of the game is getting a payout. You're paying a small amount of money to be offered more leverage so that you can make money. That's all you're doing, right? Because you may not have $2,000 to put into an account to start trading with, right? And if you have $2,000 to put into an account, right, you won't be able to trade as many contracts as they allow you to trade on a real account with your real money. You won't be able to do it, right? And so even if you are doing it so that you can over leverage and try to make money fast, if you only had $2,000, you can't put on 4 minis. You can't put on 400 micros. You can't put on 300 micros. You can't put on 3 minis because you only got $2,000, right? You can't even do it. So you're paying a little bit of money to get this extra leverage, right? And when you get the extra leverage, right, it's allowing you to make money, right? Your goal as a trader, it should be get the money so that I can fund my own account and then I can trade my own money, right? So if you want to grow the money, grow it in your own account. Don't grow it in this sim account that they're giving you because ain't nothing guaranteed, right? Ain't nothing guaranteed. Don't grow it in this sim account. Take the money. Take the money. Okay. And that's all I'm going to say on the topic. Take the money. Right. That's all I'm going to say on the topic. I have nothing else I want to discuss on it. Good evening. Who in here? Oh, I forgot to do this. If this first time tuning in Tim's Tidbits, please allow me to say welcome. Or y'all didn't tell me I'm out of focus. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to also give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Rania Grande. It's just big spot of Vito Hablo Espanol. And you're now in tune to another episode of the Intraday Price Action Recap. This is being brought to you by the Smart Money Manuscript. The Smart Money Manuscript is a course that I developed myself. It's a one-stop shop for everything that you need for trading and investing alike. It starts off with the basics, talking about basic money principles like banking, budgeting, taxes, right? And it goes all the way through everything you need to know about how to prepare for your own retirement, how to study research companies, how to open brokerage accounts, how to trade, how to utilize options and futures to leverage capital, how to understand the ICT concepts, the importance of back testing. It's 19 videos and 19 quizzes. I will say the platform had been having issues. I was back and forth with them. Their website is having issues. It like when people were trying to take the quizzes, it let you go through the quiz, and when you get to the end, it, you know what I'm saying, it would error out. It wasn't giving you your how you did. It wouldn't give you your how you did. I don't know if they fixed it. They haven't reached back out to me. I was going back and forth with them for a few days, and I just got totally frustrated. But the course is full of valuable information. The information is in there. The quizzes are there. And on top of all that, the most important thing is every second Saturday, we have a live Q&A inside the course, inside the live stream channel on WAP, inside the course every second Saturday at 12 p.m. And I answer all your hard-hitting questions that you may have when it comes to the material or just trading and investing in general. Okay. So the first link in the description below, $69.99 is all that it costs. Now, we got Mike Pence flying here with Empire Trades. We got Jada up in here. We got Lump up in here. We got Rhonda Green up in here. We got Kim up here. We got Here to Learn and Share. We got Lorraine up in here. We got Felicia up in here. We got some more people than that. We got more numbers than I see names, but them are all the names that I see. So them all the names that I'm gonna say. Did Price do anything today that caught you off guard? Did Price do anything today that What's going on? I clicked the wrong thing. Yeah, I clicked the wrong thing. All right, I clicked the wrong thing. Y'all do me a favor, man. Y'all go ahead and hit the like button and share this with somebody who you think may find value in this. I just happened uh when I was setting up this live stream today, because I had just woke up at like at 5:50. All right, I just woke up at like 5:50 and I was in here setting up the live stream. And when I set up the live stream, I noticed that the live stream I did yesterday had the most views that a live stream I had done ever, like in just one day. And
How many views?
it was like, it wasn't like crazy, but it was like I think it was like almost 300. And I just did it yesterday. And most of my live streams a week later, they be at like 150, 160 views. So it like, you know what I'm saying? It was almost twice the views in one day than all my other live streams for the price action recap get in their entire life.
Did
And
you
I'm like,
sauce?
huh?
They're coming for the sauce.
I think it's just because I was talking about something different. I was talking about indicators. I guess people like that. I don't know.
We
I
like
think
the moving averages.
It's got to be the moving averages, because when I don't have any indicators on the charts, the life of the live stream, it's like 150, 160 views at most.
I
And
think me personally, I think it was that song you played that got them extra views.
that's what it
Oh
was.
yeah, the
I
song.
forgot about that.
It was the music.
I forgot about that. It was the song, because it said it was like 200 and almost 300 views, and it said it was 35 live viewers concurrent, and it had 193 unique viewers. So that means 193 different people looked at it, right? And it at the most at one time was 35 on there together on the live stream. But 193, that was it. That was it. It was the
Again,
song.
again. Again, let's see if it gets up there.
I'm about to run it back. I got to, hey, no, we ain't gonna run it back, man. We ain't gonna run it back. Woo, Lord. Man, did Price do anything today that caught you off guard? Did Price do anything today that, you wasn't expecting? Right? Did it go up when you thought it was gonna go down? Did it consolidate when you thought it was gonna rally? Did it disrespect a PDub rate? Did it not bounce off of your simple moving average? If Price did something that caught you off guard, man, let me know, and we'll discuss it, man. We'll discuss it. Pull up with your hard hitting question. I'm not sharing the Zoom link publicly no more because of the crank yankers. But if you're in the gang, go ahead and pull up with your hard hitting question, and we'll discuss it. Right. If you turn your attention over to the charty tart, right? This is our price action. Trying to get it to a point where I'm not blocking anything. All right, that's a good spot right there. I'm not blocking anything there. Yeah, I'm not blocking anything there. When say Japan Express do it every time. Okay. Okay. Let me see here. You say the word getting out. I don't think the word getting out there. I think it's just I had it where I can show the timestamps. There it go. Like I had it where it can show the timestamp so I can see when people said stuff so I know how long ago they said it. Right. All right, man. Again, if you're in all right. If you again, if you haven't hit the like button and share it with somebody. That's the stuff I'm supposed to say. I guess the algorithm likes it when y'all hit like. You know what I'm saying? The algorithm likes it when y'all hit like, and the algorithm like it when y'all share it, and then they show it to more people, and we get the word out to more people and try to help more people secure their financial futures, right? Help more people either start to trade their own money or help more people get to payouts with prop firms. Speaking of prop firms, Apex, they got a pretty good sale going on right now. If you're at a point where you got a good trading strategy, let me go full screen for a second. And this is important. That's why I say if you got a good trading strategy, if you are already, consistent, right? They're having a really good sale right now because all of their accounts are the exact same price and they have 60% off. Okay. So with the 60% off, you pay $78.40 for any size evaluation. And if you pass it before December the 9th, if you pass it before December the 10th, December the 9th, the sale ends at 11:59 p.m. Right. If you pass it before December the 10th, right, you can pay $6 for the activation fee. So all in, you're in $84.40 for any size account. Right. That's an amazing sale right now. I got a link in the description below, affiliate link. Use my link and I'll appreciate that. So if you're at the point where you got a consistent strategy and you want to try a prop firm, I got affiliate link for Apex, $84 all in, right? Remember, you can pass it within 1 day, right? Or you can take 2, 3, 4 days to pass it. Long as you pass it before December the 9th, you only pay $6 for the lifetime activation fee. All right, make sure you choose lifetime activation fee because if you mess around and choose $85 a month, they're gonna charge you $85 a month activation fee forever. You can't change it, right? So that's a good thing. Remember, they got trail and drawdown, so you can't let the trades run up and then come back down because if it run up, go ahead, take your money, see profit, take profit, right? And you have to trade once you get funded, you got to trade 8 days where you got to be above the buffer, 8 days of trading, 8 trading days, not 8 calendar days, 8 trade. You got to take at least 1 trade per day to count as a trading day. 5 of those 8 days got to be at least $150 in profit, right? I think it's the same for all the accounts. Check the amount size. I think it's $150 across all of them, though, right? $150 in profit, and then you can request your payout. The minimum payout is $500. The maximum depends on the account size you got. The 25K is $1,500. The 50K is $2,000. I never did anything higher than the 50K, so I don't know what the max is on those. You go look at it, right? So they're having a great sale right now if you looking at using a prop firm, but you want to be have a consistent strategy before you go spend your money, right? So if you got $1,600 laying around and you want to get 20 accounts, hey, now's the time to do it. 1,600 to get you 20 accounts all in, right? But I ain't saying go buy 20 accounts. But if you just want to have 20 accounts to trade, 1,600 if you got it laying around, right? Let me see. Let me see if my mathing. 78.4 plus 6 times 20. 1688. So if you got $1,700 laying around, there you go. All right. If you got $1,700 laying around and you want to get 20 accounts and then go showboat on the internet that you just made a was a $40,000 withdrawal, 2,000 times 20. You just made a $40,000 withdrawal from Apex. There you go. 1,700. Go make a $40,000 withdrawal and brag to your friends on the interwebs on Al Gore's internet. All right, man. We got price action here for the week. Yes. Make the prop firms work for you. That's the name of the game. Make the prop firms work for you. Make it work for you. Take advantage, man. It's Christmas right around the corner. Christmas right around the corner, man. Let's talk about it. Christmas right around the corner. Where do we start the week off at? Let's look and see. Gaps. We got Friday's gap on there. Thursday, that's Thursday. Wednesday, that's Wednesday. Tuesday, that's Tuesday. So this is the new week opening gap Monday. Boom. Look at that, y'all. Y'all see that? Remember what I told y'all about the holiday trading and the reason why I was picking this as my new week opening gap. Let's go to the weekly chart real quick. Let's go to the weekly chart, man. When I tell you the stuff that come out of Michael J. Huddleston's mouth, if you're not paying attention to it, this is the weekly candles right here, right? This is this week, right? This is this week. This is last week. What do y'all find peculiar about this new week opening gap that I marked right there? What looks peculiar about that? What's going on with that? Does that look right based off of, let's come over here. Let me see. The 1027. Let's find 1027. 1027. What's different about these new week opening gaps? This new week opening gap here and this new week opening gap there. Somebody tell me what's the difference in them? Somebody said no space. What you mean no space? On the second one.
Like no volume imbalance, maybe? Is that what they mean?
There's a difference in the bodies.
Overlapping?
Right. Why in this one, I got it anchored from the close of this week to the open of this week, but this one over here, I got it anchored to the open, but I don't have it anchored to the close of the previous week. Why is that? Why is it not anchored to the close of the previous week right now? Who remembers?
Because last week was the short week, the Thanksgiving.
Yes, it was the Thanksgiving holiday. So with this one over here, right? This week's new week opening gap is anchored to the close of the last real trading day. So from down here where it's anchored at, from that 25,314, that's the close of the last real trading day last week, which was Wednesday. So that Thanksgiving was no trade day. Friday was no trade day, but there was Globex trading that was happening during that time. So during the Globex time, right, price went from 25,314 up to and closed at 25,484, right? But that's all just the holiday trading, right? So when you have a holiday you want to pay attention to not only the close after the holiday to the open of the new week, but you want to pay attention to the close of the end of the regular trading session, meaning the full before the holiday to the open. That's why instead of having this little small new week opening gap right here from that close to there, which would look like this, right? And I'm just going to make this like red, right? So that we can see it. Okay. Right. So instead of having that little new week opening gap right there, right, I chose to go with the larger new week opening gap, right? And another thing that Michael teaches, right, is when it comes to the new week opening gap, right, you can also, in some cases, you want to pay attention to the larger between the new week opening gap and the actual volume imbalance between the settlement price, right? And the way you do that is you turn the settlement on, right? And if there's a difference in the price, right, you can see it here, right? When I turn the settlement, right? When I turn the settlement off, but when I turn it on, you see how that candle moves like that right there, right? You can also pay the like in this case, right? That's the settlement price. It's a little bullish new week opening gap, right? And that's the setup, that's the settlement price off, and it's a little bearish new week opening gap. So you can also pay attention to just say if it was like a small bullish gap there and I turned the settlement off and it turned into a big, huge volume imbalance. Sometimes you can pay attention to that and see how price reacts to those levels. That's just another little level of looking where other people not looking at, right? And now when we go back down to our intraday time frames, right, and we look at our where'd my line go? Let me go to the weekly. Okay, and there it is there. All right, and as y'all can see, right, there's that little small new week opening gap right there from the holiday. But when you squeeze this up, what is price reacting to? Right, what is price? This is the start of the week right here, right? This is the where's Sunday? Let me find Sunday. Right there. All right. So that right there is Sunday at 6 p.m. Right. So that's Sunday at 6 p.m. right here. So all of this here is the holiday trading. Right. That's all the holiday trading right there. This right here is where we started as Sunday. And for my weekend chart prep, I marked this out as my new week opening gap. Right. Now, based off of where price started at on Sunday throughout this week, what did price respond to? That little new week opening gap after the holiday, or the new week opening gap based off of the close from Wednesday to the open on Sunday, right? Which one do it look like it responded to y'all? Mm. Right. Which one do it look like? And when you, especially when you put the quadrants on there. Oh, look, y'all see what happens when you put them quadrants on there? Do y'all see that? Let me make this bigger. Make this bigger just in case y'all couldn't see it. All right. This is all the time. These are all the prices that traded within that new week opening gap that I marked, right? So we're looking at the one, right? And if there's anybody who's on here that wasn't on the weekend chart prep, right? Go back and look at it. When did we do the weekend chart prep? When was that? That was on Sunday. When we did the weekend chart prep, right? Look at the weekend chart prep and see when I chose this as the new week opening gap and I explained why. And then look at this, the regular one, if you just do it based off the candles, what the candle is showing you for when the week closed, right? Which one does it look like it's responded to, especially when I put them quads on there? Watch this right here. Oh, my goodness. Wait a minute. Is price consolidating right here? Does that look like consolidation to y'all right there? What is that right there? Is that consequent encroachment of the new week opening gap right there? Is that the halfway point between the new week opening gap? Right, let me do this right here. Watch this right here. When I turn these quads on. Oh my goodness. Wait a minute. Wait 1 minute, Tim. Is this right here a bullish order block? That's a bullish order block, right? That's just, you. Why did you pick that bullish order block? That's just a random bullish order block. That's somewhere, right? That's just a random bullish order block. Okay. We have us a inversion fair value gap right there. We got us a bullish order block right there. These just random spots that I'm just picking, right? But if you noticed when I flashed those quadrants on there, right? These quadrants, right, are made because I anchored something at this price and I anchored something at that price right there. So where are these prices in relations to these PD arrays that I circled right here? Are they before or after? They are they to the left? Right. So anything to the left, it happens what? It happens before or after these PD arrays are created. Huh? Hmm? You say the quadrants too light? All right, let me darken up the quadrants for you. Let me darken up the quadrants for you. Okay. All right. So it happens before, right? It happens before. So that means when these things happen, price look like this. All right. Price look like this. Well, Tim, we don't see no price. Exactly. Because it happened beforehand. Right? It happened beforehand. So how do we get quadrants? Matter of fact, let me do it like this right here. We're going to go back. Wait a minute. I got to get out of this play. Hopefully I don't have to. It's since I put it in replay, it's not letting me undo this since I put it in replay mode. But I'm gonna just do it from the beginning. I'm gonna do it from scratch. I'm gonna do it from scratch for those who, right? The PD arrays that I circled over there. Come back here. Knock off all the price for this week. How do you get quadrants? Somebody tell me, how do you get quadrants? What do you do to get quadrants? What tool do we use? Talk to me.
Fibonacci tool.
All right, so we get a Fibonacci tool.
And you anchor it to the high and the low of your dealing range.
Yes. So what do we say we was using for our anchor points here? We're using the close on Wednesday right here. This 15-minute chart says the 4:45 candle. That candle closes at 5 o'clock. The close of Wednesday, I got this turned around backwards, to the open on Sunday. We need that 6 o'clock time. But let me flip this around. So we need that one candle. I put too many candles on there. I just needed that one candle. Right. So we anchor it from the open on Sunday. That's the high. And we anchor it to the close on Wednesday. That's what we did for this right here. So now price, right? Can y'all see those lines? Let me darken it up just in case y'all can't see those lines. I'm gonna fatten it up too. All right. Can y'all see those lines? Is that better?
Yeah, they showing good.
I want to make sure y'all can see this. All right. So now this our price be looking. Hard, that hard right edge. We always be talking about that hard right edge, right? So this is our new week opening gap, right? The price just started trading. Now, I explained why I was watching this as the new week opening gap as opposed to this close. See right here, as you look here, you can see that this is the close on Friday and this is the open on Sunday, right? I opted not to use that as my new week opening gap. Why? Right? Why? I talked about it, but somebody cared to explain to me why I opted to use this as the gap instead of this as the gap. Right? And it has something to do with all of this trading over here. Right? I just said it, and I said it back during the weekend chart prep. Talk to me. Right? Tim, why you always trying to get us to talk? Because we sprinting now. We sprinting now. If you don't never make yourself think about this stuff, you won't never do it. You always pull up and just wait on me to give you the answers. Yeah, holiday, but what about it? We know this is the holiday, this the holiday price action here. I said it got something to do with this price over here. I said it in here. What did I say about this? What did I say about this price over here? Come on now. Come on now. Y'all taking too long. Ain't nobody talking. Call a friend, tell a friend, tell a friend. Call a friend, tell a friend, tell a friend to tap into, get on the Zoom and start talking to me. Call a friend.
You talk about the end of the formal closing day on Wednesday. And so what? 5 p.m. And we're not counting Thursday and Friday.
Yeah, I know that. I know that, but why? So
What was your question? Yes.
What is it about this price over here that made me want to ignore this and use that open and that close as my new week opening gap instead of that opening that close? Right? We already know this was the holiday, but what is it
Sure.
about this price over here that made me want to
It was
and
just consolidating
no,
and
not
no
consolidate.
volume.
It's in this, not volume. We don't care nothing about volume. It's the same principle.
Mm-hmm.
Listen, it's the same principle as the reason why when we're starting in the morning, what liquidity do we look at first when we're starting?
Former session, previous session.
Yes, it's the last time that the New York trading session was allowed an opportunity to trade. So I want to look at, if I'm trading anywhere near that price, I want that information to be at the top of my mind. All of this holiday trading, the New York session had no opportunity to participate in any of this. So this little bit of space up here that the holiday trading left, that's not my priority. My priority is what happened the last time the New York session got an opportunity to trade. Now, if the holiday do something crazy and rip 500 points and we ain't nowhere near it, right, then you put the focus on that as your new week opening gap. But since we're still within a nice proximity, that's what you want to put the focus on, right? You not want to ignore this, but you want to put the focus there on this new week opening gap there, the close of the last real trading day. It's the last time the New York session got an opportunity to participate in price action. Okay. All right. Now, what do we say about these quadrants? These quadrants are not because price closed here and opened there. The quadrants aren't about that, right? This opening price and this closing price, those are just your algorithmic anchor points. Those are the points to let you know I am anchoring on something that the algorithm will refer to. Everybody follow me? All right. This kind of stuff, this is the way that little Timmy Rogers make it make sense in his head, right? This is the way that little Timmy Rogers make it make sense in his head. And this is stuff that I'm learning from Michael J. Huddleston. This is how I make it make sense in my head. These anchor points, this close and this open, that those are your anchor points. Those are algorithmic levels, that prices that the algorithm, that IPTA will refer back to, right? That's a pillar. That's a close. That's a pillar. That's a open. That's a pillar. What's our 4 pillars? What's the 4 pillars of price? Talk to me.
Open, high, low, and close.
Open, high, low, and close, right? The algorithm refers to these 4 pillars for everything that it's going to do. It refers to the open, high, low, close on every candle, every minute, every hour, every day, every second, every single candle. It refers to the open, high, low, and close on every single candle to make all of its decisions on where it's going to go to next, right? So when we anchor to a very specific close and a very specific open, right? Or we anchor to a very specific high or a very specific close, right? No matter what we're anchoring it to, long as it's an algorithmic PD array, it's an algorithmic time. If you run quadrants on it, the algorithm would do something magical. Who knows what the magical thing the algorithm would do if you anchor it on a very specific open, close, or high and low? What will the algorithm do in reference to these little things that we call quadrant levels right here? What would the algorithm do? It will magically do it. What will it do at these little things that we call quadrant levels right here? Talk to me. Leave PD arrays to reference. Very good. Where will it leave the PD arrays to reference at? Where will it create it? Will it create it based off of something back here? Or will it magically look beyond this little wall over here and create PD arrays? Right? Can it look? Look, oh, how did it draw that out around there? Let's test this theory out, right? Y'all remember when I circled those PD arrays back then? Remember when I circled them? Now, when we picked this out, remember, price, there was nothing over here. When we drew this, he said, this is our new week opening gap. Right? So when we put these quadrants on there, there's nothing over there, right? But magically, right, when I start sliding like this right here, where's that circle? That circle is around what? See that circle right there? Where's that circle touching?
The lower quadrant.
That circle is touching
25%.
Yeah, that circle is touching that lower quadrant. But there's no price there. There's nothing there. Let's keep moving. Right? That circle there is very close. So guess what? It's probably a wick in there. Or we're going to get real deep in a minute. What is that circle there touching? That circle there touching the upper quadrant, right? So now here, there may be a wick there, or it may be in conjunction with this, or watch this right here. Oh my goodness. Oh my goodness. Is that touching a quadrant in between the quadrants? Oh my goodness. And then we put the meat back on the bone, right? And we come back over here like this right here. Order block, inversion fair value gap, right there. Order block. And then what you notice about this inversion fair value gap and that BISI right there. This BISI is engaging with that quadrant, and then the inversion fair value gap is engaging with that quadrant and this one, but that quadrant right there. And then where is price being supported? At that quadrant level, and it's trading back down into, what is that right there? That's a BISI that's engaging with that same quadrant level as that inversion fair value gap right there. And price is being supported right there. And that BISI engaging with that breaker right here. This is a bullish breaker right here. That breaker engaging with that, right? And that order block is in line with that breaker on that quadrant level. But Tim, Tim, when you first drew this out, there was nothing over there. How did you know that the algorithm was going to create PD arrays at these quadrants that you can trade off of? Because this stuff works. Oh my goodness. Oh my goodness. Hold on. Let me take this off. All right. So enough fun with that. That's enough fun with that. All right. Is it making sense to everybody? Can you see it now? Can y'all see it now? Right. And then y'all notice how, right, this new week opening gap wasn't on there, right? That new week opening gap wasn't on there. This is this week's new week opening gap right here. This is our new week opening gap here. This is the new week opening gap from October 27th, right? If we go back here, right, and we look in price there, right? So this is our current new week opening gap, okay? And then when we look to the left, right, this is the first new week opening gap that we come to, right? We got a new week opening gap down here. We got a new week opening gap up here, and we got a new week opening gap right there. Coming to the left, this is the first new week opening gap that price trades up into as we're coming back up. This new week opening gap is below there. This new week opening gap is above there, right? That's the 10th and the 3rd, right? That's the 3rd. It's up there. And the 10th is down there, right? So when we look to the left, when we look to the left, that's the first one we come to as we're looking to the left, all right? And when we go in here, right? And let me turn off this wick. All right, let me turn off that wick. So we come in here and I got a fib on that one. What is that? No, I don't have a fib on there. Okay, I don't have a fib on there, but I'll just eyeball this to the best of my ability. Here, let me squash this up when price got up in there. I'll just eyeball this to the best of my ability. Roughly around there. That's close enough for government work. Like that. There. And look at, right, how we stair stepped up through, right? Went above, touched that upper quadrant, came back down, swept out liquidity, came back up to consequent encroachment, came back down to the low and the order block, came back up, got above consequent encroachment, came back down, right below equal bodies, taking out liquidity, went back up to the upper quadrant, dropped down to consequent encroachment, came up, swept liquidity, dropped down into this week's. We dropped into this week's right there also too, right? Because we saw how we was trading to the levels inside this week already. We already looked at that, right? Came back up, right? Swept liquidity up here above the upper quadrant. Sit here, tapping on consequent encroachment, right? Took out some liquidity, traded up, took out that liquidity, right? On this inversion fair value gap, popped up above, right? Dropped down to the lower quadrant, came back up to the reclaimed fair value gap, dropped down to the low, came back up, swept liquidity at the reclaimed fair value gap and the new week opening gap, dropped back down, swept liquidity, came back up to the lower quadrant, popped up to the high, set relative equal highs, dropped down to the new day opening gap, traded back up just below the high, popped up above, took out liquidity, rest on the high, dropped down to consequent encroachment. Wick came down into the fair value gap and the order block, came back up all the way out, came back down to the upper quadrant, right? Came back down to the upper quadrant again, right? Came back down, failed to reach the upper quadrant, traded below the equal bodies, pushed up all during that. I wonder why the algorithm was bouncing in between these levels right here when that PD rate is from all the way back in October. Because this stuff really works. Get off my internet, man. The ICT stuff don't work. It's a joke. Michael Huddleston is a fraud. He can't really trade. Ain't nobody making no money off of that ICT stuff. Hey, man. Did you get it? Did you get it yet? Ooh, my secret. Is it starting to make sense to y'all now? Is it starting to make sense? Do y'all see how when you anchor your tools to the right open, high, low, and close, you can utilize the concepts to predict where the algorithm is going to have high probability setups, right? Now you know. This is what Michael means when he says, I can tell you where my PD arrays are going to form before they form. This is what he's talking about. He has given us everything that we need, right? Everybody be like, teach us Enigma, teach us Enigma. And they can't even understand the core content. This is just his core content. This is his core content. And I believe in my heart of hearts that the truth behind Enigma is just understanding all of his core contents. That's what I believe. I don't believe Enigma is anything different. I think Enigma is the understanding of all of his core contents, right? Understanding how to utilize everything, understanding everything about a first presentation, understand everything about all of his PD arrays, understanding everything about his 88 entry models. I think that's what Enigma really is. Because just think about all of the sauce that he's been sprinkling in 2025, right? Think about it. He talked about, let me go full screen for a minute. He talked about first presentation fair value gap years ago, right? And now here in 2025, he started talking about, look at the first presentation and the first opposing fair value gaps within certain hours during pre-market, right? And then he came back in a Twitter space when he was showing trades, and he said, remember when I told you I can do this every hour? He said, this is all I'm using is the first presentation fair value gap on every hour to trade off of. So that's another thing about the concepts that never dawned on me. It never dawned on me, hey, go test. Now, y'all know I test the first everything. I was testing the first of the week, the first fair value gap of the week, the first of the day, the first of the session, the first of the month, the first of the year. I was testing every first, but it never dawned on me to test the first presented fair value gap for every hour. Never dawned on me. Right? Never dawned on me. Until I saw him do it. I said, you know what? That never dawned on me to look at that. Right? If he had never taught about how to look at price in conjunction with a holiday, right? Do you think I would be able to have such clarity on what price was doing this week? Think about it, right? Think about it. When I put this old new week opening gap on there, just think about this. When I put this old new week opening gap on there, I did have quadrants on there. I didn't have to put the other one on there. And I know this one is a little bit light. That one is a little bit light, so I'm going to use another one. Oh my God. It would have been so much easier just to make the other one darker. But I didn't want to do that because all right. Now, looking at price, this is the price action. Where's Sunday? All right. This is this week's price action, right? With these magical boxes, right? With these magical boxes that I got off Amazon Marketplace for $69.99, right? With these magical boxes, you can see these boxes and lines. You can see the precise levels where trading opportunities were presented for longs and shorts, right? If you notice, right? If you notice at all of these quadrants, even here, right? Even here, when we look there, right? When we look, let's go through and just look at it for a second, right? Right? At all of these quadrant levels, right? See our prices trading off of that, right? We wicked up in there, trading off of that, right? Coming down here. Look at all these different trading setups at these quadrant levels. Look how price is reacting at these quadrant levels, right? Come down, rally up, all off these quadrant, all these quadrant levels, right? Right. Price is reacting off all these quadrant levels. Bounce up, quadrants, come down, quadrants, right? All these quadrants, we can see how price is doing all of these trading setups, right? For longs and shorts, right? If you just open your mind, oh, that's a beautiful one. Now look at that, right? Imagine if you were selling off of turtle soup here in that move right there. Oh my God, right? All these quadrant levels, right? You can see, right? Now, and this is just something that a little boy from Fort Lauderdale, Florida, drew on his computer in Columbus, Georgia, right? One night. Now, if I come here, right? If I come here and I turn all of that off, explain to me why price doing what it's doing. All right. Explain to me why did price stop right here? Right? Why did price react right there? Why did price consolidate right there? Right. But with these magical tools on there, even if I don't put if I just put the new week opening gaps on there, look at that. If I don't put just like the TDA for like the specific PD arrays that I was watching for today's trading, these were like specific PD arrays that I was just watching. This high, this low, this inversion fair value gap. Those were the main meat and potatoes, right? But even if I don't put them on, right? You see how much clearer it becomes when you can visually see this area of support. You're anticipating some type of trade and setup happening at that line right there. And when you look and see, oh, the algorithm created an order block right there, right? So when price start coming back down here, right now, you're anticipating something to happen here or here. Which one is it going to do? Who cares? I'm going to wait for a reaction at this or this, whichever one it gives me the reaction at. That's what I'm going to, you know what I'm saying, execute. It gives the reaction at this one, right? It gives the reaction at this one, right? Price is coming back down, right? It gives the reaction at the low. Price coming back down again. It trades below the low. So what am I anticipating, right? Something to happen here, something to happen here. When I look over there, I see there's an order block resting right there on that quadrant level, right? An order block right there. And it's not just for ranges. It's for PD arrays also. All right. Y'all see, I just randomly picked out an order block, right? Randomly picked out an order block, graded the order block, right? Went body to body on the order block, graded it. Where do we go? Just below the lower quadrant, respect the mean threshold, right? Went to him. I did it because we got this long wick on the top, but you can still grade the entire order block if you want to. Then you'll see that it just came down to mean threshold. All right. These quadrants are where you're looking for your trading opportunities. Right? If you understand how you're anchoring it, well, why does it work? I'm anchoring it to a high and a low right here, and I'm anchoring it to a open and a close right there. Inside on a PD array with an algorithm created at a very key level. That order block was created at a very key level. Right there. Right, that's a bullish new week opening gap. So that order block is connected to a weekly open. The high of a weekly PD array, that's the highest quadrant of this weekly PD array, is at a very specific place. So if you anchor it to any of those pillars, there's going to be algorithmic reasons to trade on them quadrants. Man, I'm tired of talking, man. Y'all ain't listening to me. Y'all don't hear a word I'm saying. Y'all ain't hear the word I'm saying. Do anybody got anything for me, man? Do anybody got anything for me?
No, that was golden. Thank you so much.
Whoever seen Coming to America? Y'all ever seen Coming to America? Y'all ever seen Coming to America? You remember when they was in the barbershop? Not the barbershop. What's the barbershop? When Arsenio Hall character, the old man, that boy good. Was it? No, that was Arsenio Hall. That was he was talking to Arsenio Hall character. The little dog, the dog skinned back. That boy good. They was at a concert, and Arsenio Hall character said, "Good and terrible." Talk about Randy Watson. He'll talk about Randy Watson. That boy good. Good and terrible. I thought that was trash. Don't be hitting on me. Hey, man. Do anybody got anything for me? Does any of this make sense? We notice you have spoken, so we will lower your hand. Oh, that's what it was saying. Yes, sir. Makes sense. All right, man. I don't see nothing in the chat. Ain't nobody speaking up.
I got a question.
I might have an answer for you. I don't know.
So you remember how we did the dealing range looking back like 60 days? Is that still relevant?
That's always relevant.
That's always relevant. So it's
So it's what?
Because now I got like so many dealing ranges. Like I don't even know which one, like which upper or lower.
You don't just repeatedly put new dealing ranges on there. Once you establish a dealing range, that's your dealing range. If you're still trading within that dealing range, you're still trading within it. You don't have to, if you don't exceed your 20, 40, or 60-day range, by the time that 24, 60 days go by, you don't make a new 20, 40, and 60-day range. You understand what I'm saying?
Yes.
You're still within that same dealing range. So because my 60-day dealing range that I got now, that started out as I think it was my initial 20-day dealing range. You know what I'm saying? Like let me go to my daily chart. When I first mapped out my dealing range, right? And all I did was change the name. I didn't draw a new range, right? So this right here was initially my first 20-day dealing range, right? When I think we was back
It's
over
not
here,
showing.
right? This right here was my first, when I first did this was my 20-day dealing range. Like, cause I think I did it when we was like, price was like right here somewhere. Right now I click there. Nope, that ain't where it was at. This was my 60-day. It was my 60-day dealing range right there. So 60 days. Yeah. 40. It was my initial 40-day dealing range. Right. Because if I did it here, right, to that low. Okay. So that's initial. For some reason, I was thinking it was like 20-day. We might have started because it was this low. I might have started over here somewhere. I can't remember. But anyway, starting back here, right? That was initially 40 days. So now from where we are now, that's 67 days ago. I'm not going to go in and make this my new 60-day low. Why? Because I'm still trading inside this dealing range. This is still, and that we talked about this before, right? This is how I know y'all to be paying attention to me, man. We talked, Yolanda asked the same thing. There's a difference between a dealing range and a look back. The look back is you're grading it based off of if the looks back 20, then 40, then 60 days. That's how it looks back, right? It looks back 20 days for liquidity. It looks back 40 days for liquidity. It looks back 60 days for liquidity and PD raise and whatever. It's like when you look back at, so you say, okay, I'm gonna look back to that house. Okay, ain't nothing there. Look at that house. Ain't nothing there. Look at that house. That's what it's doing. It's looking further and further back for stuff to engage with, right? So you're grading that to look to create points to look for trading opportunities in this algorithmic range. Right now, this dealing range don't change just because we keep moving forward in time. This is still a dealing range that we're within. So these levels are still important because we're still trading inside of this dealing range. Just because we've gone outside of the look back window for 20, 40, 60 days, we're still inside of this dealing range. You understand what I'm saying? So there's no need to keep drawing new dealing ranges over and over. And if you do draw new dealing ranges, just delete your old ones. You know what I'm saying? But as long as I'm inside of this dealing range, I'm going to keep these levels on my chart. Because now, if I was to draw a 60-day look back from where we are now, right? Go 60 days, that's 60 right there. That's 60 days right there. This is my lowest low and this is my highest high, right? So if that's my lowest low and that's my highest high, okay, my dealing range looks like this.
Yes, that's the one I have as well.
And there's nothing wrong with that. That's your 60-day look back.
And I also have the one going up. Am I doing that wrong?
No, you're not doing it wrong. You just got a bunch of lines on your chart. You know what I'm saying? You got a line orgy going on right now.
So I'm a little bit confused, but so I could have it as just a reference, I guess.
Take one of them off. If you're dealing with the 60-day look back, take this off. Take the old one off. You just got it there for you're looking at too many things. You're looking at too many things. Take the old one off. Right? And you want to know why I'm telling you to take the old one off? Because when you anchor to a open, high, low, or close that the algorithm has created for a specific reason, what's that? We took out buy side liquidity when we came up here. We took out sell side liquidity when we came down there. That is a dealing range, right? It's also within your 60-day look back. That's your lowest low and highest high within your 60-day look back. So if I look at just that alone, right, based off what the algorithm has done, right, we will see right here we have a bullish order block that's on the lower quadrant, right? We have a SIBI that's in touching consequent encroachment. We got back above that SIBI. That's the first SIBI that came down, and now we're using it as a inversion fair value gap, right? It's in conjunction with consequent encroachment. We have a BISI that's in conjunction with consequent encroachment that we traded into. The algorithm is going to do the same thing if you're anchoring to algorithmic levels for a specific reason. There's no need to try to keep everything on your chart. If you understand why I'm putting this on my chart, if it's based off of an algorithmic principle, it will work. But if you put everything on your chart, you're just going to start to confuse yourself. Well, Tim, why is it working? Because you're inside of a dealing range here. What type of dealing range am I anchoring to right here? What type of dealing range is this?
A bearish dealing range.
A bearish dealing range. So here we're anchoring to a bearish dealing range here, and we're anchoring to, wrong thing, we're anchoring to a bullish dealing range here. We're anchoring to two different things. All right. So if I'm anchoring to this bullish dealing range, I'm looking for reasons to buy in a discount. Right. Or I can also be looking for reasons to sell in a premium inside this right here. So if I'm anchoring to a bearish dealing range, I'm looking for reasons to sell in a premium if I'm bearish, or buy in a discount if I'm bullish. There's nothing wrong with anchoring to this right here, and it's a bearish dealing range, because you understand, hey, the higher time frame is in a buy program. So all I got to do is look for reasons to buy on these quadrants in the discount at or below equilibrium. You see what I'm saying? Because where's the buying opportunities, right? We got a bullish order block in conjunction with this, right? We trade down here into the order block right there. Got a small breakaway gap right there. You know what I'm saying? Where's that? On that level there. That order block is on that level there. We grade that, right? We come down here below the upper quadrant, fail to get to mean threshold, and we rally up. If we grade the whole thing, we come slightly below mean threshold, fail to get to the lower quadrant, right? Rally up. Where is that fair value gap resting? Right there on equilibrium, right? What do you want to buy, right? Fair value or below, right? Buying opportunity at fair value or below. right? And where did both of these buying opportunities take you? This buying opportunity and that buying opportunity took you right there to that high. The high at the drop right there. All right. You can utilize this bearish dealing range to look for trading opportunities, because if it's bullish and you're inside a sell program, if the higher time frame is bullish and you're in a sell program, right? Once you sweep that liquidity, you want to start seeing it using the quadrants as stair steps to come back up out of this sell program, right? Because in order to retrace and go back up, you have to go from a buy program to a sell program to manipulate the liquidity to switch back to a buy program. All right. So don't get married to this right here. That's why I say wherever you come in and you start your IP to look back, there's nothing wrong with that. Because IP is gonna, it looks 20 days back first, 40 days back, then 60 days back. All right. So when I got this right here mapped out, this is beyond 60 days back. But when we over here, guess what? IP is going to look 20 days back first. Guess what? 20 days is inside. It's inside this range that I'm already looking at. So it's going to work for me. Why is it going to work for me? Because I'm still inside this bullish dealing range. I haven't moved outside of it yet. And those 20, 40, and 60 days, they're all inside of this dealing range that I'm still looking at. So just because I choose not to move mine, don't mean you got to leave it on your chart, especially if you're looking at the new 20 and 40. Because when you look at mine, if I come here, right? If I come here and turn on my 20, see what it's anchored to? That's my 20. That's my 40. Right? I've moved to the 20 and the 40, but I never moved to 60, right? Because we're still inside this dealing range. Because right now, the 60 is in the same place as the 20 and the 40. But right now, I'm more concerned with this overall dealing range right here. That's why I'm only looking at this, right? But there's nothing wrong with looking at the 40-day. Why's my 40-day down there? Let's turn to 6. Oh, there it is. Yeah, that's the 40-day, that high, that low, right? And that's the 20-day right there. That high, that low. You understand what I'm saying?
Yeah, got you.
And withdraw that money. That's the last time I'm gonna say that. Anyway, what else we got, man? Anybody got everything else? Withdraw that money. Put it in your pocket. And I ain't gonna say it no more. Hey, man, I appreciate y'all for hanging out with me. Hopefully y'all got something out of this. If you haven't hit the like button, hit the like button. If you have hit the like button, I appreciate you. Share it with a friend that you think might find some value in this. When do we have our Q&As? On the first Sunday? Are the Q&As on the first Sunday? When do we have our Q&As? When are the Q&As? Yes. First Sundays. All right. So this Sunday at 7 p.m. is our monthly Q&A with the gang. This Sunday at December 7th at 7 p.m. My mother's birthday. is December the 8th, right? My mama birthday is December the 8th. All right. Y'all show my mama some love. If y'all got my Cash App, show my mama some love. If y'all don't, I'm going to tell my mama I told y'all to show her some love and y'all did not show her some love. If y'all got my Cash App, show my mama some love. God has blessed her to see another year. Sorry to tell y'all, this is the best mother in the world. I don't care how y'all feel about your mama. This is my mama. This is the best mama in the world. Show my mama some love. Hashtag the new TLR. Y'all show my December the 8th. I want that Cash App to go crazy. Show my mama some love. I'll see y'all Sunday for the monthly Q&A for the gang. Everybody else, I'll see y'all Monday at 6 p.m. for the price action recap. Since we got the monthly Q&A Sunday, I ain't gonna do no chart prep this weekend, but y'all already know how to do the chart prep. We sprinting now, right? We sprinting now. I'm slowly weaning y'all off, man. I'm gonna wean y'all off. I'm gonna wean y'all off the udder. You gonna get up off the udder. Y'all know what an udder is? Do y'all know what an udder is? R.N. Deborah, what's an udder? What's an udder, R.N. Deborah? What's an udder, Deborah? Deborah, where you at? Somebody in the chat said a teat. Light skinned Deborah. R.N. Deborah, why you? R.N. Deborah must not be here no more. For those who don't know, this is an udder. That's an udder. That's an udder right there. This is an udder.
I said a boob.
Where you at? Where you said that at?
I said it in the chat.
I ain't see nothing in
YouTube.
the chat. Ain't nothing in YouTube. Ain't nothing on YouTube. The last thing I see on YouTube is yes, from here to learn and share. And Jada said a teat. What's up, little man? Let me get that off the screen. That little man don't
He's talking to you.
He don't need to be looking at no udders. Let me take that off the screen. He don't need to.
We were raised on the udder. Leave him alone.
I hope he wasn't raised on that udder right now.
Not that one.
I'll try to tell my dog sure when I say what's happening. I'm trying to wean y'all off the udder. Hey, I appreciate y'all. Deborah, did you find this helpful tonight? Did you come in late or was you here the whole time? Now she can't talk. Hey, man.
I had to go and mute you from YouTube so it wouldn't be an echo. Yes, I found this helpful.
Oh, yeah.
And yes, I got to go back and look at it.
You ready to get off the udder?
No.
Why not?
Nope.
You want some fish sticks and fries?
I want fish sticks and fries.
Yes.
I want some fish sticks and fries. That sounds good right now. Man, I had some pizza. Shout out my homeboy Brandon. If y'all ever in Columbus, Georgia, I just found out today he got a pizza shop called The Slice. Man, this pizza was so good. Now, I typically like thick crust pizza. I like deep dish. I like for my crust to be thick on my pizza, like not just on the booty of it, like around the edge. I like for the whole base to be thick. I like deep dish pizza, right? This is very thin. It's got a thick crust around the outside. It's like New York style pizza that's flat with the big crust on the outside and it's real flat and thin. And the stuff on top, it remind like Marco's pizza have like the thin crust and the meat be so big when you try to pick it up, the pizza be dropping because the toppings are so heavy and big. Man, this pizza was so good. One of my homeboys named Brandon. I ain't seen him in years. He used to do like some acting. He been like in Stranger Things. He done been in some Tyler Perry stuff. He done been in, you know what I'm saying? He and I know a few people that be doing acting. They don't be like the lead characters, but they be, you know what I'm saying, they they make a career out of it. You know what I'm saying? And so when I seen him, I was like, man, I ain't seen you forever. Right. And then my wife was like, this his spot. I'm like, oh, this actually his spot, right? So it's called Slice. It's out there in Midland. If you ever in Columbus, man, go check out Slice. Man, that pizza was so good. That's my first time going there. I'm talking about, I tore it up. I got a lunch special. It's 2 slices in a canned drink for $10. And the slices, they big, like if you ever seen like the size slices at Sam's when you buy a slice, not the ones that how they cut it in the whole pie, but when they got them big old slices, yeah. Matter of fact, if you don't eat a lot, you can just buy 1 lunch special and buy extra drink and 2 people can eat it. But me, I went down through it, ate both slices, was full as a tick. Hey man, that's enough promotions. Speaking of promotions, y'all get a Smart Money Manuscript if you want to read price action the way that me and the gang do, right? Every second Saturday we got a Q&A at 12 p.m. East Standard Time. If there's nothing else, we're gonna call it there, man. Until the next time I decide to get on Al Gore's internet, it's been your boy, Timothy Lee Rogers Sr., aka Aranya Grande. I'm not a bull. I'm not a bear. I'm a freaking beast. Yeah, man. Empire Trades. Withdraw that money, man. Y'all be safe out here in these trade streets. Gone. Yeah.